So we finally have some very big news for one of the biggest EV makers in the entire world, Xpeng Motors, that announced some pretty amazing news over the past couple of trading days that have really put a lot of investor confidence back into Chinese EV stocks. And so in this video, I'll be going over exactly what these news catalysts mean for Xpeng stock. And at the end, I'll do a comparison between Xpeng Motors and NIO to get an idea for which one of these stocks is a better deal right now and what exactly does the short-term future hold for the prices for both of these companies. But before we get into it, guys, make sure to drop me a thumbs up and hit that subscribe button if you haven't already. As you guys can see, the first big thing that happened is that Xpeng essentially announced a new listing portfolio where these guys were included in the Shenzhen Hong Kong Stock Connect program. Essentially what this program allows investors to do is to basically transfer their stock ownership from mainland China to the Hong Kong Stock Exchange, which is obviously where Xpeng has one of its share listings. And as we all know, Xpeng also has a big share listing in the United States, which is exactly why the risk for investors while investing in Chinese EV stocks like Xpeng, in my opinion, is significantly reduced. And this program inclusion for Xpeng only further solidifies that argument, as we've seen some pretty good investor confidence as the shares were up around 11% yesterday after this news came out. And Brian Gu, who is the president of Xpeng, has said that this inclusion will not only further expand and diversify their investor base, but it will also provide the opportunity for their customers, partners, and EV investors to participate in their growth story in China. And this is actually a pretty big story because in China, it's actually not very popular for people to invest in companies that are in their own country, even though obviously a lot of innovation takes place in China and some of the big tech and software companies come out of China. And as we all know, Xpeng has definitely been leading the EV growth race outside of Tesla over the past few months, as these guys reported triple-digit growth in their revenues for the fourth quarter of 2021, and also a massive backlog of deliveries for their P5, P7, and G3 SUV. And following that, today we had a big news come out as well, where Xpeng is now expanding its partnerships through Sweden and Netherlands, where Xpeng will be selling their P5 and P7 sedans. This is a very big news because Xpeng has historically just been selling in China and Norway, but now we're finally seeing this penetration through some new strategic partnerships and dealer network investments throughout Europe. This will actually be the first self-operating retail store in Europe that is going to be developed by Xpeng, and this is actually beating other companies like Li Auto and NIO to this game. And if you haven't been keeping up with the data recently, Europe has recently become the fastest growing EV market outside of China across the entire world. And by far the most interesting part about this is the fact that not only is Tesla selling very well in Europe, but also other EV brands like Renault, Skoda, and Volkswagen have also significantly gained a lot of market traction. As you guys can see, in October of 2021, the top models that were sold in the country did not even include the Tesla Model 3 in the top 10, but obviously in the year-to-date numbers, we saw the Tesla Model 3 top the charts. What this tells me is that there is a very big and diverse customer base in Europe that is very open to investing and buying new types of products from different types of companies. I mean, just look at the diversity we're seeing in the top 10 year-to-date models, where we're seeing companies from Volkswagen, Renault, Ford, Kia, Hyundai, Fiat, Volvo, and obviously Peugeot. And we're also seeing the seasonality kind of slow down in Europe, where we're starting to see a consistent amount of plug-in electric car sales across the entire year instead of just pent-up demand at the end of the year. And so the fact that Xpeng is now expanding into the Netherlands and obviously Sweden is a very big deal for this company and should pave the way for other automakers like NIO and Li Auto to also start gaining some market share in Europe. And as we all know, the auto industry is a cyclical industry, meaning that the auto industry struggles when the economy is going down and when there's very, very big risks of a recession. And so this diversification of revenue from different continents across the world is going to help these companies to protect their investors and their revenue streams from having significant drawdowns when certain economies go through a boom or bust. And on top of that, we're also seeing a lot of support from analysts in the Chinese investing space. As you guys can see, Barclays' Jiang Shao recently started coverage for both NIO, Xpeng, and Li Auto with an overweight rating on Tuesday, where basically he's saying that these companies have a very big opportunity to take a sizable market in the EV market, not only in China and Europe, but also globally over the next couple of decades. And this is something that I've been mentioning on my channel for a very long time as well, which is the fact that China's goal is to become a cutting-edge leader in technology and obviously autonomous driving and potentially even flying cars. And so it's going to do whatever it has the power to do to make sure that its companies are some of the most successful companies across the entire world. And obviously it is going to take time for this to happen. We already have a lot of companies like Volkswagen, Audi, BMW, already releasing a lot of EVs. But at the end of the day, the growth, at least for these companies right now, is a very big opportunity for investors, because we all know that enthusiasm around EV companies has continued to grow, especially in the United States with the Build Back Better plan, the infrastructure plan, and all these other bills and policies that have been talked about over the past couple of years. And as you guys can see, this specific analyst concludes his statements by saying that Xpeng specifically has a very good approach when it comes to its store ownership, where they're basically having this hybrid approach between cell phone stores and some third-party dealers. And this is most definitely giving Xpeng a little bit of an advantage in its market positioning, because obviously they have a very wide variety of cars and products on offer right now, from SUVs to sedans to sports sedans and also compact sedans. As for NIO, this analyst mentions that this company is definitely going to have some of its growth pain alleviated this year, because obviously some of their production capacity is actually set to double starting in March, which should definitely bring back a lot of investor confidence after some of the shutdowns they experienced at the end of last year. As for what am I personally doing with the stock, I have personally been continuing to load up shares, anything under $40 a share, because at the end of the day, this company is growing at a ridiculous rate, and the entire small cap and growth market is still in a very big fear cycle, which is exactly when I personally like to buy shares in some of my favorite companies for the epic bull run that we might see in the EV sector. And although supply chain issues might not fade away by the middle of this year, we still have some very big catalysts coming up for Xpeng Motors, especially in their March 14th earnings report, where they should release their full year 2021 results. And this earnings date is going to be very important because they're going to be announcing their margin data, their revenue data, and their order backlog data for their P7 and P5 sedans. And because of that, the investor base on NIO is much more volatile and fragile when compared to the investor base on Xpeng Motors. And institutional ownership is also a little bit higher on Xpeng, which means that whenever this stock price goes down on the left, there are more buyers that are aggressively looking to get into the stock. Now, over the long term with the EV market, I think both of these stocks will outperform the rest of the growth stocks in the EV industry. But you obviously want to keep in mind that both of these companies are not going to perform exactly the same. As for where I think both of these stock prices can go in the short term, no one really knows, but I think if we get above this $40 and this $26 level, we could see some very nice moves of at least 4 to 5% in both of these stocks in a very short amount of time. And so even though over the past couple of weeks we've seen some big moves in both of these stocks, I would still go ahead and start investing in these companies if you're looking to take part in these very, very high growth companies. And as you guys can see, if you're a NIO investor, you're definitely getting a little bit of a better deal when it comes to their technicals, with the RSI that's trading at around 38 when compared to 47 on the weekly time frame. But as usual, in the short term is when technicals really matter, and in the long term is the real fundamentals of the business that truly matter. But anyways guys, make sure to drop me a thumbs up if you found some value from this video. Let me know down in the comment section below what you guys thought of Xpeng's latest news and some of the recent moves and action we've seen in both of these stocks. But anyways guys, I hope you enjoyed this video, and I'll catch you guys in the next one. Take care. And so in this video, I'll be going over exactly what these big news catalysts mean for Xpeng stock, and at the end, I'll do a comparison between Xpeng and NIO to get an idea for what exactly these stocks could be doing in the short term, and whether or not I am personally buying or selling either